Hi guys, welcome to my trade in the live video. In this video we will take a deep dive into a trade that I took and recorded live. I will talk you through my thought process, strategy and more. Without any further ado, let's jump right in. The trade was taken based on institutional accumulation for Monday-Tuesday period, which was 20th to 21st of May 2024. On Saturday the 18th, I analyzed the institutional data from the previous intra-week contract period and discovered that the institutional players were bearish. So I shared it in our data Telegram channel as seen in the screenshots. The link to join that channel is in the description of this video if you're interested. On Monday, I came on the charts looking for a sell setup on EURUSD. So I marked Monday open with a red vertical line to visually represent that I am bearish. I also marked the end of Tuesday with a vertical line to see the period I'm looking to trade. Then I moved on to analyze price action from the previous intra-week contract to gauge the momentum in the market to determine if it is bullish, neutral or bearish. In this case, momentum is low as price action is accumulative in the previous intra-week contract period. Then I moved on to mark the accumulation range, which is the high and low of the previous intra-week contract. In an accumulative scenario, I need to see retail liquidity taken. Because I'm bearish in line with the institutions, I needed the retail sellers stop loss levels to be taken out, and I need more than one retail liquidity zone wiped. So I marked the retail liquidity zones available at the moment. Identifying retail liquidity levels is quite easy using fractals. I recently posted a video on that. If you haven't watched that video, do that after this one. One of the retail liquidity zones has been taken, so I needed the second one taken and I'm good to find a good sell entry. For the best entry price, I use EBITDA prices. I also have a video on that. In case you don't know what EBITDA prices are, you can go on the channel page and check that out. I marked the next two minor EBITDA prices above the liquidity zone for my entry and stop loss placement. After that, I marked the target EBITDA price, which is the first minor EBITDA price outside the accumulation range. With that done, all that is left is to wait for price to do its thing so I can get in with my sell positions. I waited, but price action was slow on Monday and never came to my zone to complete the second liquidity run. On the next day, I checked the economic calendar to see major events and the currencies involved. On that day, there was Canada's inflation rate. So I checked the institutional accumulation on USDCAD to see if it aligns with the bearish EURUSD, which means USDCAD should be bullish since they are negatively correlated. Fortunately, the institutional traders have accumulated buy positions on USDCAD. So I informed my inner circle members that I have dumped EURUSD for USDCAD for that day. If you are yet to like the video at this point, please go ahead, like the video, subscribe to the channel and don't forget to turn on your post notifications so you don't miss out when we drop new videos. After sharing that with the group, I jumped on the chart of USDCAD to do my price analysis. The price action was very similar to EURUSD but inverted. The previous period was neutral as it was on EURUSD. The next step is to see retail buyers taking out at least twice. Unlike EURUSD, USDCAD has taken out retail buyers not twice but 3 times, as you can see, so it is perfect. Due to the fact that my attention was on EU on Monday, I have missed the opportunity to buy at the very low formed after hunting retail masses. That means I have to trade the second opportunity, which is the retracement into the demand zone formed. I marked the zone Then I marked my target EBITDA price just like I did on EU. I also marked my original stop loss EBITDA price for trade invalidation. And finally, I marked my entry price, which was 2 pips above the demand zone for clearance, so my pending order will be activated. At this point, all is set. I just needed to set my pending orders and wait for it to be activated. And that's exactly what I did. I loaded my positions, as you can see. Then I kept waiting for my orders to be picked. I hope you remember there is inflation rate release on USDCAD. So 10 minutes to the data release, price came very close to my pending orders and began reversing. Immediately I saw the rejection before picking my orders, I knew I had to load my positions manually to prevent missing out of the move when the data is released and volatility kicks in. So I loaded my positions manually and set the stop losses and targets. I left my original pending orders in case they decide to pick it before taking off. That will help me maximize the move. After this was done, I waited to see the volatility when the news is released. And as expected, price took off without picking my original pending orders. So I cancelled the pending orders and moved my stop loss to break even and let the trade run risk-free. At the time price ran the previous period high, which was my target area, I took off 50% of my positions while leaving the rest to run to the EBITDA price, which was my TP. Then I closed my charts and shared the result with my data channel members. On the next day, price had a deep retracement in Asian session while I was fast asleep, but when London opened, the move resumed and went straight to my TP EBITDA price, where the remaining 50% of my positions were automatically closed. That's a trade in my life as a professional forex trader. If you want me to keep recording my trades live and keep sharing it with you, let me know in the comment section. Don't forget to like the video, subscribe to the channel and turn on your post notifications so you'll be notified when I post new videos. Until the next one, have a great day.